Hind Copper and Hindustan Zinc shares surge another 5% in trade today. Record rally continues after a sharp rally since the beginning of 2026, driven by a surge in silver and copper prices. Silver prices hit a fresh peak overnight, up nearly 26% in 2026 so far.
Vedanta shares surge over 4% following a bullish note coming in from Nuvama. The brokerage says Vedanta remains its top pick. They revised the target price to 806 from 686 earlier. Nuvama believes the current price does not fully factor even aluminium and zinc, and thus all other businesses are available virtually free.
Puravankara shares surge over 10% as the company released its third quarter business update, where collections have risen 22%, pre-sales grew 17% on a year-on-year basis.
ICICI Prudential surged another 3% today after a 3% rally yesterday post the quarter 3 results. The management in its conference call tells analysts that they are seeing trends improving for the APE, and also they are expecting a better performance going ahead. Well, hello and welcome to Chartbusters. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. The market's wibbly-wobbly today ahead of a holiday tomorrow. But we have the Nifty that is down close to around 40 points. The Nifty Bank is yet to come to the party. That's down 150 points. That's been the one that's been batting for the bulls. And it'll have to do the heavy lifting yet again. But the good news, Mangalam, is one index at the top of the screen, just above you. Well, that one has moved into the green, the mid-cap index. And that makes portfolios feel good, though we need to take into account number of stocks declining are still outweighing the number of stocks advancing.
Take that point entirely, Nigel. But you know, the stocks which are gaining with so much gusto, and the kind of quantum of gains that we're seeing, especially in the sectors that you track, the metal space, or even, you know, some of these precious metals names, that the ones who have those in their portfolio, they will far outweigh the sort of losses that we're seeing in other stocks. So there's no big loser that we're seeing in terms of moves today on the downside, even though the number is higher. But look at the gainers, 2.5% on the index, 6% higher on Vedanta, much higher on all the other stocks. And even the ones that are not directly in the news, the likes of Tata Steel, etc., all of them up around 3.5%.
Well, you know, Mangalam, non-ferrous actually has taken over ferrous.
Yeah.
You know, and that's why you're seeing that these stocks are doing well. And just to plug in, you know, a word on our coverage here on CNBC TV18, in December, you know, we were all putting out pieces for the year. Yeah. We had asked whether aluminium will be, you know, the commodity track for the next year, because there are 3 companies that you can attach to aluminium. Copper, you have only Hindustan Copper. And from there, whether you look at Nalco, Vedanta, as well as Hindalco, because of this melt-up that you're seeing, these aluminium-based stocks are doing very, very well. If I'm not mistaken, from that first week of December till now, all the stock prices are up between 20 to 25% or thereabouts. That's point number 1. Point number 2 is, in the middle of 2025, you know, Mangalam, there was this Viceroy note that came in on Vedanta. And the street got very nervous, the stock got slammed. We just did an analysis and we took Viceroy's you know, report on board, and we stated the fundamentals. From there, Vedanta is up 50%. So, you know, just in terms of coverage and putting out the fundamentals, that's what we have done on the metal space.
Take that point, Nigel. Thanks a lot for that. So that's about the metal space. But good time to welcome Chandan Taparia, who's the head of Derivatives and Technicals Wealth Management from Motilal Oswal. Chandan, good to see you in. The Nifty is, you know, wibbly-wobbly right now. Yesterday's low has been protected so far, 25,600 to 25,500 to 25,600. Seems to be a bit of a support zone. But the minute we cross past that 25,800 or go closer to 26,000, there is some supply coming in. Do you believe the market would be in this range itself in the near term?
Good morning, Mangalam and Nigel. Thanks for having me, and wishing everyone a very happy Makar Sankranti.
Wish you the same.
So talking about Nifty index, just 2 days back, it took support near 25,500, but failed to surpass its 50-day EMA and hurdle near 25,900, and again drifting lower. So structure for the market is slightly weak if we are looking for trading point of view. India VIX is at 11.3, FI's long short ratio is at multiple months low at 8%. FIs are selling. Call writing is visible at higher levels. So because of that, index will be in a broader range with some supply at higher levels. But again, due to the lower VIX, downside is also seems to be kept. But till it doesn't surpass 25,900, we have to be with sell on bounce, or we have to play the range between 25,500 to 25,900 marks. And talking about Nifty index, this is comparatively better. 2 days back, it took support near its 50-day EMA. That was near 58,800, but again got stuck in a range. As of now, till it holds above 59,000, I believe buy on decline could be there in the Bank Nifty rather than Nifty. and upside it can bounce towards 59,750 kind of level. So buy on decline in Bank Nifty, but Nifty will be in a broader range with limited upside in this market scenario.
Okay, all right. Hi, Chandan. Looking good, and festivities. Wishing you all the best during this festive season. That said, you've got a couple of stocks for us?
Yes, Nigel. Thanks. So talking about the sector and stocks, we are totally focused on metal and mining. And I believe this theme is doing well, and we are recommending from last couple of days. Hindustan Zinc, Copper, Nelco are our preferred top ideas from last couple of months. And in fact, today also I'm recommending on the same. So first trading idea is buy on Hindustan Zinc. This stock has given a consolidation breakout. And overall trend is positive as it has been making higher tops, higher bottom on the monthly chart, holding well above previous hurdle of 650. And now some short covering trigger could be seen in the counter the way the entire precious metal rally is heading upwards. So recommending to buy on Hindustan Zinc with support of 652, and this counter can head towards 695 marks. Second trading idea, that is buy on Coal India. One of the strongest counter which has been making higher tops, higher bottom on the weekly chart, trading at multiple months high. Fresh consolidation breakout of last 7 days followed by a pole and flake pattern. So recommending to buy with support of 430, and it can head towards 460 level. Last but not least, there is Tata Steel, again from the metal and mining theme. Consolidation breakout. Stock is now quoting at its multiple year high or at lifetime high territory. We started to witness coal unwinding at 190. In fact, fresh put writing is visible. So Tata Steel can head to new territory. One can buy with support of 181 for an upside target towards 200 marks.
All right, Chandan, you started off by wishing all our viewers a very happy Makar Sankranti. So what Nigel and I would do is we'll request you to send some Tilgur over to our office. But at the same time, for all our viewers, if you could give us some nice ideas if they bought it this Sankranti and until the next Sankranti, if they had to hold something that looks very good on the charts, a kite or something.
He's ready to.
He's ready. Oh, there he is.
Chandan is always equipped.
Chandan's always equipped. Chandan, you want to hold that kite up and give us a view for next Sankranti, a stock?
Yeah. So,
how do you fly it?
Yeah, so we will fly because the market is in range bound, but selective sector and stocks are doing well. So we are totally focused, and we believe over the next 1 to 2 quarters, sector and stock specific theme will fly well in this market scenario.
Okay, and you are sending the Tilgur to our office, right?
Yeah, we'll be sending.
Perfect, do that.
Okay, all right. Thanks, Chandan, for that. We catch you soon and appreciate you joining in. Well, let's get you a few ideas for profit, though, from Money Control Pro. Kanchi Shah of moneycontrol.com joins in to talk about a stock that she's tracking closely. Kanchi, over to you.
So today's stock idea is Hero MotoCorp, which is one of India's leading two-wheeler manufacturer. So Hero has started doing really well in its global business, which has bounced back strongly, with dispatches jumping like over 41% YOY in Q3 FY26. This wasn't driven by just one market, but by Bangladesh, Nepal, Sri Lanka, Colombia, also solid traction. Management also believes this export momentum should continue in the coming quarters. Now on the domestic demand side, so demand has been quite healthy over here as well, which is helped by the recent GST cut as well as the robust wedding season. Hero expects the domestic industry to grow around 8 to 10% in the second half of the year. Another interesting piece is its EV strategy. So Hero's EV segment hit its highest ever quarterly market share at 11.7%, which is a sharp jump of 6.8%. So the brand is now among the top 2 EV players in 56 towns, which is a clear sign of improving acceptance and deeper penetration. At around 20 times its FY27 projected earnings, the stock looks reasonably valued. With its strategic moves and improving fundamentals, I think Hero MotoCorp is a good idea to accumulate for a long-term perspective.
All right, Kanchi, thanks a lot for that. With that, we'll step into a short break. As we do that, the countdown for the budget 2026 underway. The most influential voices decode, analyze the impact and policy decisions from the finance sector. We'll bring you a power-packed lineup all throughout January and on the day of the budget as well. Helios Capital, Sameer Arora for all things market, followed by JP Morgan, Sajid Chinoy. He'll discuss the macro signals, and we'll also get you insightful analysis coming in from industry veterans. You name it. We have Dinesh Kanabar, Ashok Wadhwa for the tax rhetoric as well. So that's a power-packed lineup for budget 2026 as the countdown begins, only on CNBC-TV18.
Welcome back. You're tuned into Chartbusters. You're on CNBC-TV18. Well, let's go through a couple of stocks. L&T, that one was under pressure yesterday as Vivek was updating us. There is some uncertainty with regard to an order in the Middle East. But what are brokerages making of these reports? Vivek, tell us more.
Well, that's right. So, yesterday we did highlight about how a Middle Eastern agency had indicated that Kuwait was looking to go ahead and retender, cancel, and then retender projects worth almost $8.7 billion. L&T, as per our understanding, was L1 or favorably placed to win close to $4.5 billion of those bids. Yesterday, L&T gave an update to the exchanges stating that the projects reported to in the given report were not part of the company's order book, and they said that they cannot comment on the status of tenders or commercial decisions of its clients. Now, just for some context, remember, in the Q2 con call, L&T had gone ahead and confirmed to the analysts that in Kuwait, they were L1 position in 3 out of the 5 bids that they had submitted, and they had given the total cumulative size of all of these bids closer to $4.5 billion. However, they had indicated to the analyst community that all of the bids were in fact above the budget of Kuwait, which is the main reason why these particular orders are now going in for retendering. What our brokerage is saying, JM Financial is saying that potential delay or cancellation of these bids may adversely impact order inflow. They say that, even with this cancellation, L&T can go ahead and comfortably meet its FY26 order inflow guidance, but may not beat it significantly. They do a 3% cut in the core FY28 EBITDA on the back of this order cancellation. Axis Capital says that the event signals a scale down in a win-worthy order prospect of close to $4.5 billion. They're saying outperformance beyond 10% consolidated order inflow growth in FY26 looks tough. They also caution that if oil prices stay below $60 a barrel, there could be some slowdown as far as tendering activity in the Middle East is concerned. And lastly, UBS says that they see downside risk to consensus estimates as far as order inflow estimates are concerned for FY26.
All right, Vivek, thanks a lot for that. Quickly going to Yash for ICICI Lombard Q3 results. Yash, the key takeaways, quickly.
Well, it's been a weak quarter for the company as far as third quarter is concerned. Though the top line would look decent, the net earned premium growing at about 13%, but operationally, the results are significantly weak. Underwriting loss has increased to 132%. Operating profit has dropped by about 17%, as a result of which PAT has dropped by about 10% despite the investment income being higher by about 42%. The combined ratio, that has also shot up because of the weak underwriting performance, coming in at about 104.5 as compared to about 102.7. Motor and health premiums have meaningfully grown, but what has that come at the cost of? Higher underwriting loss, motor underwriting loss increasing by about 137%, retail health underwriting loss also increasing by about 134%. In our conversation with the management on the regulatory changes, expected regulatory changes around commission, said that they would welcome any move from the insurance regulator on regulating commissions. And as far as motor is concerned, they said first half was weak, but in the third quarter, in terms of premium growth, they've tried to catch up with the industry average.
Okay, all right, Yash, thanks a lot for joining and giving us a quick update. Mangala?
Wish you a very happy Makar Sankranti, Yash. You want to fly like a kite here? That is classic, Yash. That is classic, Yash. Pretending not to hear us. We'll take a short break, come back and tell you what else is moving in the market. Stay with us. Welcome back. This is Chartbusters. Let's talk about the World Bank in its latest report, which says that Indian economy is projected to remain among the world's fastest growing major economies. Growth expected at around 7.2% in FY26. Ritu Singh joins in with the details of that report. Ritu.
Well, the World Bank says the global economy is proving more resilient than expected, even as trade tensions and policy uncertainty remain at historic highs. Global growth is now projected at 2.6% in 2026, rising slightly to 2.7% next year, an upward revision from the earlier forecast. Now, the improvement is largely driven by a stronger than expected growth in the United States, which accounts for nearly two-thirds of this upgrade. But resilience comes with a warning. If these forecasts hold, the 2020s are going to be the weakest decade for global growth since the 1960s, warns the World Bank. And the gap between the rich and poor economies is only widening. By the end of last year, almost all advanced economies would have had per capita incomes above pre-pandemic levels, yet 1 in 4 developing economies would still have been poorer than in 2019. Growth last year was boosted by a surge in trade ahead of the policy changes and the rapid supply chain adjustments, but the World Bank warns that support is expected to fade in 2026 as trade and domestic demand soften. Still, easier global financial conditions and fiscal expansion in major economies should help cushion the slowdown. Global inflation is seen easing to 2.6% this year. Now, the World Bank also flags a major jobs challenge ahead, with 1.2 billion young people entering the workforce in developing economies over the next decade. And so it says that job creation will have to focus on capital formation, business climate reforms, and private investment. India's growth is seen at 7.2% in FY26, supported by strong domestic demand, before it eases to 6.5% the following year because of higher US tariffs, and then settling at 6.6% by FY28. But the big message is the global economy is holding up for now, but without reforms, stronger investment and fiscal discipline, resilience alone is not going to prevent slower growth and widening inequality.
Okay. All right, Ritu, thanks a lot for that. And before we draw the curtains on Chartbusters, here's a quick sneak peek into the stocks that we'll be addressing on Your Stocks today. Don't forget to catch the fundamental and technical experts give their views at 2 p.m. later today, only on CNBC-TV18.